Hello students, hope you all are doing well. Today we are going to discuss a topic from unit number 8, that is foreign sector. We are going to discuss unit number 8, that is foreign sector. And the topic here is distinguish between current account and capital account. What is the topic? Distinguish between current account and capital account. So we need to just show the difference between what is current account and what is capital account. So before starting the differences, let us first go with the introduction. Just see over here, the BOP means balance of payment. Balance of payment consists of two components. Now might we have got a doubt that what is balance of payments. So balance of payment is just a form of balance sheet. Like all the CEC and MEC students know very well what is balance sheet. It comprises of liabilities and assets. So that is nothing but a balance sheet. In the same way, the balance of payment is a form of balance sheet which consists of all the transactions with rest of the world. The transactions, for example, whenever there is a trade between two countries. Trade means buying and selling of goods and services between two countries. It may be India and China, it may be USA and Dubai, etc. So between any two countries, whenever a trade is going on, that means there are certain transactions, like how many goods have you exported, how many goods are imported, etc, etc, etc. So what is balance of payment? It is a form of balance sheet which comprises of all the transactions with rest of the world. It may be any country from the world. That is nothing but balance of payment. Now if it is clear, let us go to the continuation. Balance of payment consists of two components. How many components? Two components. That is current account and capital account. How many components the balance of payment is divided? Two components. First one is current account, second one is capital account. Now just you can find there are two tables drawn on the board. This is table number 1, that is current account. This is table number 2, that is capital account. As the topic is distinguish between current account and capital account, now we need to show the difference between these two accounts. So first, just see on the board, serial number, left side is credit, right side is debit. Left side is credit, right side is debit. Like before I explain you what is written inside, hope you know the golden rules of accountancy which you have read in your first year. That is personal account, real account and nominal account, right? I want third account, that is nominal. What is the rule? Debit all expenses and losses, credit all incomes and gains. So upon that principle, this table is made. So whenever you see credit, you just need to think that it is income. Okay, credit means income, all incomes and gains. Debit means all expenses and losses. Expenses means what? Payments. Now let us see what's there here. Export of goods, export of services. Export means you are selling your goods to other country. Whenever I sell something, I'll get money in return. So that means I'm getting income. That is the reason it is written on credit side. Through export of goods and through export of services, how much amount we have collected? Nearly 1,100 through export of goods and 300 through export of services. Now third one, unrequited receipts. Unrequited receipt. Receipt means what? The money is coming. Okay, it's income. Now this is 200. Now come to debit side, import of goods and import of services. Import means you are purchasing from other countries, right? Whenever you purchase a book, you will pay money. Whenever you purchase a pen, you are going to pay the money. Whenever you purchase a dress, you pay the money. You are making payment. That is your expense. So through import of goods and export of goods, that is debit side. Why? Because debit all expenses and losses. So money is going, right? So import of goods comprises of 1600 and export of goods, import of services is 100. Then unrequited payments. That means payment means money is going. Again it is debit. How much? 160. Briefly, I'll explain you what is unrequited receipts and payments this side. When we come this side, I'll explain you. But right now, we are discussing about current account. So it consists of credits and debits. Under credits, what do we have? Credit means what is the third rule? Credit means all incomes and gains. Is it right? So when we'll get incomes? When we export our goods, when we sell our goods to other countries, in return we'll get money. That is income to us. So credit side we have export of goods and export of services and unrequited receipts. Then what is there on the debit side? Import of goods, import of services, because whenever we purchase from other countries, we need to make some payment. So money is going. That is an expense. So debit side, all expenses are there. That means payments are there. So import of goods and import of services. Then third one is unrequited receipts. Then these are the amounts which you need to use your skills in order to buy hard. It is very easy. It's 1100, 300 and 200. How much? 11, 3, 2. And this side it is 1600, 100 and 160. 1600, 160. Is that clear? So we are done with the first table, that is current account. Now let us go with the second one, that is capital account. The same manner I have prepared the table. It comprises of serial number, then credits and debits. What's there on credit side? Capital receipts. Capital receipts means it's again income. Whenever you say receipt, the income. Whenever I say payments, that means money is going out. So here capital receipts are 400 and capital payments are 140, that is 140. So two tables are very easy. Here export is there, here import is there, here receipts are there, here payments are there. In current account, under capital account, same capital receipts, capital payments. So table 1 and 2 is done. Now coming to this side, this complete side is explanation of these two tables, that is table 1 and 2. Let us see. From table 1, exports of goods and imports of goods explains visible trade of countries. Export of goods, import of goods, because whenever the goods are either exported or either imported, that is visible with our eyes. So that is visible trade. When I say export of services and import of services, any kind of service is not visible, it is invisible. If I say about goods, that is visible trade. If I say about services, it is invisible trade. So export of services and import of services is invisible trade. For example, shipping services, dividends, interest, etc. Here, shipping services means like whenever we do the trade with water transport. Is that clear? So whatever the shipping services, the charges will be there, that is also a service. That comes under invisible trade. Then what about dividends? Dividends means profits which the shareholders receive. Like there are certain partners in a business, whenever they get profit, that will be distributed among those partners or shareholders. That is nothing but dividends. So profits of a company cannot be visible. It comes under invisible trade. Third one, interest. Like if I say on 1 lakh there is some percent of interest, is it visible for you? No. So what are invisible trade examples? Shipping services, dividends and interest, etc. So from table 1, this side, that is export of goods and import of goods, is completed. Now you can see the third point, unrequited receipts and unrequited payments. What is the meaning of this? Let us see. Unrequited receipts are the receipts received by residents free from foreigners. Like it's unfortunate that the letter R have repeated many times. You can observe here that T letter is silent. So I cannot say receipts. I just need to say receipts. Do not pronounce letter P over there. It's not receipt, it is receipt. So the receipts received by resident. Resident means, for example, we are living in India. We are living in India. So whenever we receive something from foreigners free of cost, whenever we receive, we means residents, whenever the residents receive something free of cost from the foreigners, it is termed as unrequited receipts. Now what is the example here? Gifts. For gifts, do we charge anything? No, it is free of cost. Indemnity. This word you have come across in commerce. Like principles of insurance you might have learned. It is an indemnity concept. Means it is a kind of compensation. For example, if you have suffered a loss of 50 lakhs, out of that 20 lakhs are given by foreigners as a compensation to you. So now you need not pay 20 lakhs, only you need to pay 30 lakhs. So it is a compensation, that is nothing but indemnity. So here in both the cases we are receiving free of cost from the foreigners, that is nothing but unrequited receipts. Once again, let us recall it. Receipts which are received by residents free of cost from the foreigners is known as unrequited receipts. Example, gifts, indemnity, etc. Come to that side, unrequited payments. Just see here, we have completed export of goods, import of goods here. Export of services, import of services is completed here. Unrequited receipts are also completed here. Then what is left? Unrequited payments. Just see on the board, unrequited payments are paid by emigrants to foreigners. Are paid by emigrants to foreigners. Hope you know the meaning of emigrant. Let me give you an example. For example, if I'm staying permanently in Canada, if I am settling permanent in Canada, then I am termed as emigrant. So when I am living in someone's country, I need to make some payment to them. That means them here is the foreigners. Emigrants means the person who left his own country and went to some other country for permanent settlement purpose. That is called as emigrant. So unrequited payments are the payments made by emigrants to foreigners. That is clear. From table 2. Now you can see that table 2 is capital account. What do we have here? Capital receipts and capital payments. Let us see here. Capital receipts. The borrowings from sale of asset, sale of gold to foreigners, etc. Girls, whenever you see the term receipts, receipts means it is income for you. For example, if I sell a book, I'll get money. If I sell a building, I'll get money. If I sell any electronic item, I'll get money. So sale of any asset, or if I sell jewelry, I'll receive money. So whatever I sell, it may be any asset, it may be gold, it may be anything. That is receipt. Just not receipt, it is capital receipt. So what are capital receipts? The borrowings for sale of assets, for sale of golds to foreigners, etc. If I sell gold of India to some foreigner, so I am getting money. That is receipt. Then what are capital payments? The term itself is saying we are making payments. Lending to purchase of asset, purchase of gold from foreigners. Whenever you purchase something, the money is going out. You are making some payment. Whenever you purchase some asset, if you purchase a new television, you are making a payment. That is asset. Purchase of asset. If you have purchased a new computer is an asset. So again money is going out. You are making payments. Whenever you purchase gold, you purchase gold from foreigners, again you are making payment. So capital payment means purchase of asset, purchase of gold from foreigners. Then capital receipts means borrowings, that is sale of asset and sale of gold to foreigners. Is that clear? So today's topic is completed. That is, we have discussed the differences between current account and capital account, introduction and two tables and explanation of those two tables. Hope that this topic was very interesting and I think I have explained it well for you. So please note it down all the points and read it as many as times as possible and write it at least for 3 times for a better practice and to score good marks in exam. See you in the next class with some more and interesting topics in our subject, that is economics. Till that, stay home, stay safe and never stop practicing.